Hey, VV Nation, the summer is right around the corner. What do you do in a time like this? A lot of people say go away in May or sell in May and go away, something along those lines. But what if you don't want to do that and you want to play stocks? What stocks should you be playing? And this video is going to give you my top stocks for the summer, and they just make sense. And we're going to analyze them in the VectorVest software. But before we get started there, let's talk about market timing. From a market timing perspective, where are we? We're looking at the market timing graph on a 3-month graph. Currently, the market's in a little bit of a sideways motion. We do have a wedge, a consolidation pattern. Which way is the price of the composite going to break? Don't know. But there's a lot of trepidation out there. We have the debt ceiling crisis. We have the regional banks. We have rising interest rates. Inflation is cooling. But with all of that set aside, what stocks do you think can garner the momentum to work even as the market is going sideways or possibly breaking to the downside of the wedge and having some downside? So let's get into my list. Here's my list. I really tried to get into about 10 stocks. I just had so many things going on in my head as far as what stocks I wanted to choose for you. But this is the list that I have, and they may not all look pristine, but they make sense in the current conditions that we're in. We're going to talk about each one. So getting into the summer months, Booking.com is at the top of the list by VST. I've got 14 stocks. By VST, Booking.com is at the top of the list, fundamentally sound. And because it's summer, people are going to be booking trips to go places. The stock is currently undervalued, good upside potential, good safety, RT above 1, earnings growth at 25%. Darden. Now, this is an interesting pick because more people are starting to go out because, the world is opening up. Finally, COVID is off the table. Finally, COVID, we're free and clear. The interesting thing about Darden is that they just bought Ruth Crisp. It's a smaller segment of the whole major market, but now they've got more higher, if you want to call it that way, higher clientele to deal with. The stock is currently fairly valued, good fundamentals in an uptrend, growing at earnings at 11% a year. Now we get to the good stuff. Camping World. A lot of people out there are all into RVing. Camping World, and I've got another one, which is Winnebago. Those are my two for those people who like to get away on their own and do their own thing. I think that these sales could go up. Now, let me back that back a little bit. If the economy is cooling and people are not spending a lot of money, why would they be buying new RVs? This is mainly for the people who are currently RVing, maybe needing to upgrade, that kind of thing. But it's becoming more and more prevalent that people want to go out on their own and do their thing. So Camping World, slightly overvalued. So is Winnebago. Neither one of them are really fundamentally sound. Winnebago, though, does make money. RS above 1. I like Camping World a little better because the VST is above 1. Notice that they both have negative earnings growth rate. That makes sense because of COVID. I think that they got beaten up. But I think summer, people are willing to spread their wings a little bit. I'm looking at these two. Pepsi. You go to a picnic, you go to a barbecue. What are you drinking? Soda. But I had to put Coca-Cola on here as well. That's name recognition, the biggest soda brand in the world. But Pepsi's a little higher as far as VST. And Pepsi consistently makes money a little bit more than Coca-Cola with an RS above 1. Both have RTs above 1, earnings growth rate both at 8%, but that makes sense. In the summertime, I think the sales of these two will go up. Carnival Cruises, man, have you looked at the websites lately and see that the cruises are giving rock bottom prices, last minute prices to get on? Carnival Cruises is one of the big names out there. I just came off a cruise, Norwegian, loved it. Overvalued, good upside potential with relative value, growing their earnings at a clip of 41% a year. They're charging a lot of money. That's why they can offer these low deals last minute to fill rooms. All right, Snowflake. Now, I've got Snowflake and Palantir on here. Why do I have those? Because we're still in a nice age of AI, still rampantly growing, and AI needs data. Snowflake and Palantir are ideally suited to give the data for AI to be able to use to expand and grow on AI. Both of these stocks are overvalued. They're both more speculative plays, but both of them have RTs above 1 because the momentum is there, and I think the momentum carries over into the summer as well. Still talking about vacations, we've got Hilton Grand Vacations, currently undervalued, good upside potential. The safety, but growing their earnings at a clip of 22% a year is on there. Next, my next two are for people who like to entertain at home. Pools. To go put a new pool in your home to entertain, I think that's going to grow over the summertime. Say relative safety on pools is above 1, relative value not there. Growing their earnings at a clip of only 3% a year. I think it's going to pick up some momentum because people may not want to go out. How about this? People are not buying homes as prevalently as they were. I think an upgrade to putting a pool in your home is great for the summertime. And as far as Wayfair, man, everybody loves the furniture, and the furniture sales are picking up, but the earnings growth is not where it needs to be, but it's on my list because I think from a momentum play, it may be a good way to go. Airbnb, that also goes with Booking.com. That goes with Hilton Grand. Airbnb, people are wanting to book stuff, and Airbnb currently overvalued. Good upside potential. It's the only stock on here that is a sell. But man, they're growing their earnings at 43% a year. My last stock on the list is Walt Disney. The biggest downfall for Walt Disney right now, outside of public relations with Disney and DeSantis, is that they were hurting in the streaming sales. Right now, there's a story out there that Disney may buy Hulu to get more eyeballs. So, if with that being said, backyards, put up a big sheet, play a movie in the backyard for sleepovers and that kind of thing, and then people are spending a lot more money at the parks. Why? Because Disney's raising prices. People want to go to Walt Disney World. All right. So with those two things in combination, I would keep my eye on Disney. It is overvalued, fundamentally not sound, and not in an uptrend right now, but they do grow their earnings at a clip of 10% a year. So the whole idea behind these stocks is I think that they're going to garner momentum going into the summer. And these are stocks that I want you to take a look at. Remember, they're not all pristine, and I totally know that by way of analyzing them in the VectorVest software. They're not all pristine, but it makes sense going into the summer months, knowing that now COVID is off the table, the pandemic is now, scrapped, however you want to call it. These are stocks that people are going to run and drive through to drive these stocks higher. That's my opinion. And again, I've done the analysis in the VectorVest system. Folks, this video is over. Thank you for joining me for this video. And until the next time, see ya.